What's up, everybody? Welcome to NVTV. Hey, everybody. We are here with Jesse Rollins. We're going to talk a little bit about loans. So, Jesse, what is a loan?
Yeah, so the basics of a loan are you go into a bank and you ask the bank to borrow money. The bank decides whether or not to lend you the money based on a couple of things. Your credit, number one, and can you afford the loan, number two. So if the bank decides to grant you credit, they usually charge a certain interest rate for the money that they're going to loan you. And they also decide how long it should take you to pay them back. That kind of varies based on the kind of loan that you want. So a couple of different kinds of loans are, there's an unsecured loan. That's where you go in and you ask the bank to borrow money without putting any collateral down.
Okay, and collateral is?
And collateral is something that you have of value that you can give to the bank basically in exchange for that loan.
Okay, what is an example of collateral?
So a good example would be when you go to buy a car, right? The bank is going, the car has actually a title, okay? And the title says that you own that car. The bank is going to hold that title during the time that the loan is being paid. When you pay the car off, the bank will then give you the title.
Okay, and then you kind of just own it outright. It's yours.
And then you own it,
Right.
correct.
Okay,
So,
what are some other types of loans?
so again, unsecured is one. Secured, which would be like a car loan, where I'm giving you the money to buy a car and you're going to let me hold the car as collateral. And then you get into a mortgage loan, which is a loan to buy a home. And then for business owners, you have commercial loans.
Right. So there's commercial loans and then there's personal loans.
Yeah, so there's commercial loans, there's personal loans, and inside of personal loans would be considered a secured loan and also a mortgage loan.
Right.
Those are the two types of consumer or personal loans that people apply for the most.
Right, so those are kind of the most common.
Right.
Right, so if somebody comes in and wants to talk to you about a loan, what is kind of the process like? So if I come in and say, Jesse, I want to get a car loan, because I think typically that would be one of the first kind of loans somebody gets out of college. What's that process like? Do I need to bring something with me?
Yeah, so the best thing that I would be able to tell someone when they're coming into a bank or talk to a banker about a car loan is you need to be prepared. Anytime that you come in prepared to a bank, that's always impressive, number one, okay?
Definitely.
Because the bank is making a decision whether or not they want to loan you money. So I would tell you that bring a pay stub or two so the banker can figure out how much money that you make. Also, be kind of prepared of how much you want to spend. The banker needs to kind of know if you're just wanting pre-approved for a loan, the banker needs to know how much you're looking at. For example, the payment on a $20,000 automobile is much different than a $50,000 automobile.
You also talked about a mortgage. I think that's probably going to be a more common for kids that are getting out of college and starting jobs and have good income.
Yeah.
What's that process like? Should I come talk to you before I look at a house? Should I just come to you with everything and just say, I'm going to buy this house? What do you think's best?
We would recommend that you come talk to a banker first. We call it a pre-approval.
Right.
So the banker's going to look at your income. They're going to look at maybe the type of house that you want to buy. And they're going to make sure that you've got enough money for the down payment on the house. Once you have all that in place, the banker can issue you a pre-approval letter, which kind of gives you the confidence to go out and actually start looking for a home.
Okay. So the pre-approval letter is going to kind of tell me how much I can afford, right?
Right.
And kind of what my payment would be and things like that.
Right.
So that's good to have because then you might have your eyes on a $250,000 house, but you can only afford a $100,000 house.
Yeah, a lot of times what we see is the reverse of that. So people will go out and make an offer on a home that they just can't afford, and they come to the bank and sometimes leave disappointed because even though they might have okay credit, there might be things in place they just can't afford the payment of that house. So.
Well, okay, so that's important then. Make sure you go talk to your banker first.
Yep.
You talked about interest. There's going to be interest rate on loans.
Correct.
Do you think it's best to just go to one bank and say, I want a loan? Should they shop that? Because I know from being in the industry, interest rates vary at different places.
Right.
So should you shop? Should you just go to one place?
I think in today's world, you can educate yourself online first.
Yeah.
You can kind of check out what banks are offering online. Another thing about banking is the relationship. So if maybe you have a bank that your parents, they've always done business with, and maybe you've had an account there as a kid, that might be a good place to start because you have a relationship started with that particular bank. But nowadays you can educate yourself on interest rates, at least a ballpark of where they should be before you ever go talk to a banker in person.
Yep. So somebody's coming in to get a loan. A lot of young kids don't have a lot of credit. Are there options for them?
Yes. So when a young person comes in to get a loan, sometimes they're surprised because they have no credit. And a bank is reluctant to give a loan to someone who hasn't had any history of paying things back. So I would say it's very good to be prepared to bring in what we call a cosigner. A lot of kids may use their parents who have an established credit history. They'll bring their parents in, and the parents will also sign on that loan with the child. And at this point, if they're getting a loan, they're not a child, they're 18, but it's still their child.
Right.
So what will happen is the bank will consider the parent a cosigner. They won't consider them an actual owner of the account. And basically that's just to help the bank get comfortable in giving this person some money. It was one of the best things I did when I was a kid. Actually, my grandmother co-signed for me for my very first car. And that helped me establish a good credit history because I didn't want to do anything to, make grandma mad by missing a payment.
Right.
So I made sure I paid every payment on time. And after that first loan, I was able to get credit on my own pretty much for the rest of my life. So it's very important to have a cosigner available when you're young and starting out.
Yeah, that's a great base to have.
Absolutely.
I mean, then when you're more independent and have your own kind of credit build up, you can go get what you need.
You can go get what you need when you need it. And that's the important thing about establishing a good credit history is it sticks with you for life.
Right. So. Yeah. That's important that we talk about that because your credit score is so important. I mean, so important. It's the basis off a lot of your financial life for the rest of your life.
Yeah, I mean, it literally is one of the most important numbers that will follow you for the rest of your life. Right. Having a good credit score will help you do a lot of things throughout your life that maybe you couldn't do without a good credit score.
Right, and I mean, I think it's important to talk about that a lot of employers check your credit before you get hired.
Yeah, not only employers, insurance companies will check your credit before they're willing to give you insurance for your car.
Yeah.
So
we can't stress enough how important it is to be careful with your credit score. And I mean, the good thing is there are credit score experts out there that you can sit down and talk with, and they can kind of give you some information to help you too. So, and of course, your banker is always a good resource because we know all about the finance world.
We've seen a lot.
Yeah. So
we've seen good credit and we've seen bad credit.
Right. So. Yeah. Right. We've seen it all. Yeah. Well, thanks for tuning in, guys. We really hope you took something from us. This is some good information. So thanks for tuning in, and we'll see you guys next time on NBTV.